Greetings, market rebels. Greetings to our chart gazers out there. Welcome to this week's edition of the Sector Situation. My partner Ryan is wrapping up our market outlook for the week. I'm Wayne, and I'm going to cover the sectors to be a companion video to go along with our macro measure that I recorded just a little while ago. It's, let's see, it is 1:20 p.m. on the East Coast on September 11th, 2022. We're going to flash our trusty disclaimer up there that we're just trying to help in terms of educational content. And then, of course, the intellectual property rights notice that we've got to flash as well. And then we'll get into everything. We will go into a different share here. So let me see if I can get Zoom to cooperate, trying to really bounce back from a very challenging week last week in terms of the tech. Probably the most frustrated I've been in a long while. So let's get the right share. Oh, that's not it. Let's do this one. This would be screen 3 is what I want. All right, so I think we're set to go here, which is good. Let me just minimize a little bit of distraction stuff here, and then we're probably going to be in good shape. All right, so here we are back here. So I'm starting on the SPY, and I spent a good deal of time talking about the market, longer than I wanted to always. Of course I do that, but I put a lot of information, I think, more than I wanted to in the macro measure. So if you want to get a little bit more in depth on this one, you could probably catch the first part of that. But really, the reason why this is important is the main lean that I had. I expected more breakdown as my most likely scenario last week. And clearly we didn't get that. So as I noted throughout the week in webinars and things like that, this 390 level that we'd been expecting to be an important level for some time turned out to maybe be even more important than I thought. I really thought there was going to be at least a little more follow through here. They tried, of course, on the first trading day of the week, which was Tuesday, but by the end of that day, they had brought it back up to the support line that we had in place. They opened it a little bit lower, and there was a tiny little bit of trading below the open on Wednesday, but you could see that really reversed. And so this was the fourth day in a row that right near that level, they managed to hold the market. And at that point, things really started to change around. I think people realized, okay, which is what we were noting actually in the Rebel Pit, that, hey, these large intraday timeframes like the 4-hour and the half day, they became oversold on Tuesday, and I even put out some updates on that and some charts to demonstrate that. And they had gotten well below 30 on the RSI. The daily had gotten very close to 30. And so, quick recap would be dramatic selling really dominating for 3 weeks, come to a really important level, intraday time frames, excuse me, intraday time frames flashing oversold, and very close on the daily, right? So they just couldn't break it. They turned it around, they went. And so just to show everyone that we practice what we preach, I'm going to delve into this very quickly, but we are big believers in being nimble. And so we don't stick with a forecast, excuse me, even if it's our most likely forecast or most favored forecast, we don't just say, oh, I'm going to insist that it's like that. So we try to keep the ideas balanced in the services. UOA Pro is what we spend most of our time in. And you can see, look through these new ideas. And if you see this bullish, kind of a bullish note there, that's telling you, what the lean is, unless specified up in another way. And so if you look at what happened on the very start of the week, you're going to see that there's more bullish ideas that went in as new ideas on Tuesday, but then it really even picks up from there, because on Wednesday, we started adding almost exclusively, I think, on the bull side. And I don't remember for sure, but you could see all the new ideas that came in were bullishly oriented. And we even kept that going on Thursday. And so we tried to be balanced, but I think we were at such a key turning point, and the EOA was showing up in a very positive way, and the charts continued to improve, right? So again, you're just going to say, well, I expected this to happen, but it's not playing out that way. And it looks like that 390 level and very close to oversold on the dailies is enough at this point and they rallied and rallied and rallied, and they finished strongly. So I'm treating this as a pretty. It even continued, I think, into Friday. That we stuck with mostly new bullish ideas. You could see that. So yeah, I mean, you could see how the whole week really started out even more bullishly, but then we just pivoted even more strongly to the bull side. So just a quick look at that, but that's the whole thing that definitely I preach probably more than the other guys, Greg and Ryan, because that's what we believe is critical to success. At least I do. And so that's what we did. So there's the proof of how we approach things, right? You might have this outlook, but you've got to be in the markets. You've got to be willing to change your mind, be nimble, recognize this quickly, that this is not playing out. There could be a reversal. How far will it carry? We don't know. But look, this thing got through. It got through this first resistance line, got through the 10-day in white. It jumped above the 50 and 100 where there was some confluence. And then it took out this resistance line on a closing basis. So I'm not treating this as like, oh, this has got to fade. Do I think it's short-term overbought on some of the intraday levels? Definitely. But if you look over here, you'll notice that the RSI is giving us just about a 50-ish reading right near there. So there's definitely room if they want to continue to power things up. So now that kind of sets the table for our quick sector view. And the quick sector view is right here. And this is another example, right? Another visual example of why this was across the board buying. I'm not going to go into like McClellan's oscillator, McClellan's summation, all that advancers, decliners. That's really macro measure stuff. But they bought, virtually took every sector up from Wednesday on that we're looking at here out of the 12 main sectors that I keep on this view. And so I'm looking at this saying, okay, I still think long-term we're stuck in a downtrend overall, but did they move some things too far too fast? Yes, they almost always do that. But let's let this play out. Before we start to fight against this, let's let it show us some signs that this newfound bullish momentum is starting to wane, and it's just starting to maybe roll over. There's a momentum shift maybe on the way to the downside. That's what I really prefer to do. So let's go back and let's take a look at some of these individually, and then I'll add a few, of course, to this as well. We'll chart a few more things, and then we'll get moving on with our wrap up. But let's get back to the simple chart right here. So let's look at these things in order. And the first one, of course, would be, I'm looking for I've got another view of all these that I'm hunting down right now. And it's not, there it is. There they are. Yeah, I was trying to look for my other ones to go through these methodically. So we will look at the technology sector. And I covered this in macro measure. The big dog stocks, the heavyweights, the Apples through Microsofts and so on, if you look at those as a mini basket, they all look like they have room to go as a package, and they look like they have room to go as a individually. So they've got to get through resistances right near where they stopped in most cases, but overall they look like they're ready to go. Just note down here, the main thing I'm going to focus on is just the current RSI reading that will show up here for each one of these sectors. XLK, it's rounding up, right? All the sectors did, and it's only near 50. XLE, this is an interesting one because this has been a very good trader at times, and other times it's been a little frustrating, but still maintaining, right, the uptrend posture. Dipped below to the 150 on Wednesday, but they reversed it and got it back above from the 150, got it back above virtually all SMAs by the end of the week. Not quite there, but did hold the support line again that I've had in place. So that momentum started to shift, and it's still in a longer term uptrend the way that I chart it. So I would still try to not that we wouldn't take a counter trend trade. We actually had a couple. Unfortunately, I think they worked out, I think, pretty well, but it's trying to resume right now, right? The tell would be if it fails to do anything here and then rolls over again, that would be like, oh boy, this is really struggling to reassert itself. But I would still give it the benefit of the doubt for now. And I did add some trades that were bullishly oriented in this sector in UOA Pro this week. So that was I'm still looking for that to continue. But hey, be careful, right? Losing that 150, if it were to really come under pressure, that would be bad. Now, The talk here, of course, is a lot of, is that this, with the energy sector not acting well, that's, given all the problems that are out there, that's speaking to the world economy, the US economy, and everything not really performing well, and maybe not likely to perform so well in the upcoming future. Here's your financials, sort of a dog sector, really overall, but they just got above the 20 SMA there in blue. They are only at about 56 on the RSI, and we did add at least one, if not two, I think, bullish ideas in there that are starting to work out well. If we could just get a little more push, maybe up another percent or two, it would be nice for, I think, the traders that are trading those. But that doesn't look bad. It certainly has a higher low in, and it recovered and got back above the, in the same week, it dropped below the 50, got above it, the 10, the 100, the 15, and the 20 on a closing basis. So it did a pretty strong reversal above all those and above a resistance line. So I'm going to give it the benefit of the doubt and say, look, this thing could probably trade up to the 150 there in Rust, and maybe it closes this gap if it still exists. I don't know if it does, though. Let's quickly look at that. High 34.92, low. Nope, that gap got closed anyway. So this would be my next level, really would be up near that 150, which again, on Ryan's charts, there would definitely be a some form of a flat line not too far away from there. In fact, I would ballpark a flat line probably near 35.30, call it, on that one. But XLC, the communications, will keep moving on. This one's obviously rolling up, obviously not a leader right now, but they're starting to pick up. RSI there's 49. It's been in bull control for a few days, but it's not stale yet. It all depends, right, on probably on news. Here's your transports, always near and dear to my technical heart, because I want to see how these are working out. And they're still, again, they look a lot like communications, but they're certainly, right, started to make an effort, came off of oversold levels. And you would think now that they're on the verge of maybe breaking out, but you need to see that get through that 20-day before you can even think about some of these loftier levels. So I would say, look, 20-day would be my big number. 100's right near there at 75-ish, 20's near 76. So it shouldn't be easy for this to get through there. We'll see. We'll see if there's some developments that change that, but I wouldn't, not something I'd be favoring for a big upside move at the moment. XLV, the healthcare sector, this one had a very strong move. I think we were adding some names that in here in the Rebel Pit. And fortunately, again, this rally continued. So that was a fortunate development for us for the new Rebel Pit ideas. But this getting above the 200 would be big, right? We got the 150 that maybe tamped it down Friday, 200 there in purple, near 130, 183 currently. And then there's going to be a flat line. Clearly, there's a flat line up here somewhere. We'll call it near 134ish, just to put a round number on it. So we'll see if they can do that, but that would be the next couple levels of resistance. And you can see that the RSI right now is near 55. So all these things really have room, and they have room on the weeklies as well. So if you like to look at weeklies too, not a bad idea, but they are showing about the same thing in many cases. So in terms of RSI readings, XLP, the staples, they were a little doggish. They didn't do so much, but maybe because, right, people went back to a risk-on mindset more so for the reasons we discussed in macro measure. But these have this is what I hate to see when I'm trying to formulate an idea for Rebel Pit or TNT, or help Ryan with Rebel Weekly, especially UOA Essential, UOA Pro, anything, because there's so many SMAs here that people follow. And probably a flat line would be somewhere in there, it looks like, too. There's a lot of resistance right here, it seems. So that does look like it's trying to work up. It's got a lot waiting for it to keep it tamped down. Now, of course, if it fights its way through a lot of various SMAs and flat lines, and even maybe a trend line, we could put a resistance line on here too, probably from here through here. If it does all that, then wow, that's showing you something. That's showing you that it's maybe going to be stronger than you expect. But I would wait on that one for sure, in terms of not my favorite place to be right now. I'd like to see resistance very far away when I'm a bull and support very far away when I'm a bear. I don't see that there. at all. So here's your discretionary. I think this looks a little bit better. And there's a great example, frankly, what I was just talking about, where there's a gap back here that doesn't appear to be filled. It's above a lot of the SMAs, and there's room for it to try to run up, close this, and maybe get up to the 200 there in purple again, where there's probably a flat line lurking near there as well. So that would be a decent little move, which would interest me more. Of course, it needs to sustain its momentum, but even this one is, even though it's acted well, it's still only at 57 on the RSI. So short, just like everything else, right? Short-term overbought on your intradays, and then on your daily, not really there yet, or the weekly. So you've got room if the gang wants it. Remember, we mentioned this in macro measure, middle of September, that tends to be the more kind of bullish phase or supportive phase in September historically. And then the final third of the month is really when the rough stuff starts again. So what we're seeing here isn't really a shocker, right? In terms of the seasonality, week early, supportive middle month, and maybe bullish, a little bit more bullish. And then later in the month tends to be negative. Here's your real estate sector. Miraculously, I don't, this is another one that I would, if I were trading on fundamentals, I'd probably be shorting it every 15 seconds as soon as I got a confirmation. But I'm not going to do that because the charts are telling me no, that the momentum shifted and they want to move this back up for now. Got its work cut out for it, I think, but there's your 20, there's your 100 in light blue and white respectively. So dashed white, that is. But you've got a flat line very clear, I think near 44-ish, right? So if that moves up, but not a big mover, but look, it's acting better. Like the market, it has a higher low end versus some of these prior lows. So I don't want to give this stuff short shrift, because I will note this, and probably should have in macro measure, and that is that a lot of times these rallies are incredibly dubious in your mind, and they're based off of things that really are short-term factors, poor positioning by overhead, short squeeze. But then news develops and these things take on a life of their own that's more legitimate, but for much higher prices. So again, that's why it pays to be nimble and not lack conviction or waver too much, but it pays to be nimble and really adjust things through your options position management. You can be, if you become good at that and you are disciplined with it and diligent with it, you can crush it, but a lot of people don't, a lot of people kind of overlook that, but that's what professional traders do all the time. So here's your basic materials, again, looking better. Saw some UA in the space, added some on the bull side. Certainly not overbought at 54. Would expect this to come up to the 100. You would expect that 100 there in white to be the big deal. Again, another one where it's only 2% higher. So, you got to get through those kind of things to start even thinking about the 200 in purple and some of these gaps getting closed. But I'm not expecting that, but I'm also open-minded enough to know that that could certainly happen, because the favorite time of the year for Wall Street is coming up, and that tends to be the final quarter where they like to goose everything and prove to all their clients that they're the wizards they're paying them to be. Hey, look, you didn't lose that much this year. That's what gets us in trouble for January a lot of the time, when then reality kind of kicks the door in after that markup that's illegal, that happens almost like clockwork at the end of every year. But that's a whole nother subject. XLI industrials here, 51.7, right? No big deal, stuck right at the 150, which is again why I'd add this to your chart, your SMA view anyway, because this does play a role. I mean, it's not as prominent as the 100, 200, and the 50 for most people. Probably not even the 20, of course, but it ends up mattering. It's often a great place to. We've seen it just in the little stuff we've done so far in macro measure and in the sector situation here. But it's a level that matters at times, and I think enough people follow it that it's worth keeping on your chart. XLI, though, what can you say? It looks a lot like the rest of the market. Utilities, we do this really to be thorough, but interestingly, with rates up, I guess the power situation is offsetting the fact that rates are higher. Normally, higher rates do not help this group, but maybe, right, that's just being overtaken by energy demand. So this obviously fit 63. This has been one of the better sectors because of what's happening in energy. And so it continues to be that. Let's take a look at the SMH. It's the semiconductor holders. So we'll take a look at that. This is a big one. So we mentioned this, that this was lagging, right? Because they had been walloped with it. They've really been working great. We have to really be thankful. They've been helping our services, naturally the subscribers in them. So the AMDs, the NVIDIAs, boy, they've been great traders. And then we noted that this was a laggard sort of as the end of the week. And I did see a couple of our gang picked up some SMH calls and work with them, which was great to see. Because this was also lagging the market, yes, but they always seem to get around to even finding things that they hate. Ultimately, someone's going to go in there and start jamming it back up again, and you can make money off of it if you notice it's lagging and really trailing the market, and that did work out there. And you can see right now 40, 45. So this sector is normally a leader. It's really been struggling. Fortunately, that's worked out, so I can't complain, but overall, it does have room to go. And I did want to mention that there's been some decent volume, not in anything crazy, but decent volume on these up days, and it's across the board. So I do think people stepped in. They may be operating on information that I don't have, that they love maybe they're just in it for a trade. I don't know, but the long-term picture to me still remains concerning. But I'm going to go with the flow, and I think we've already shown that in both of these videos this week, and that's what we do. And we know that you have to do that. You really have to do that. Big term, long term positioning is fine, but you may be a long term bear, and you might have great reasons. But I'm in league with you, but you've got to hedge or do other things to offset these counter trend moves that can be painful. Which, again, we cover at Market Rebellion, but maybe overcover them in my case, but 51-ish, rounding it off on the XHB, another one that would make no sense to me to go up, but it doesn't matter, right? If you can make money from it, make money from it. Got to think that the 150 in Rust and the 20 there kind of stop it into tracks. And there's definitely a flat line right near there as well, near 63. But look, hey, if it gets through there, then we've got to look at the next flat line up, and that's probably going to be, it looks like around 64.50-ish, maybe, to be fair, something close to there. Close anyway, 64.50 we'll call it. But then look, it could make its way up towards there. It very well could, and it would make no sense to a lot of the traders at Market Rebellion. I know from seeing all the comments in the webinars and in the Rebel Pit, but that's what these guys do, right? They're great at creating cognitive dissonance. So you got to give them their due. Just trade what you see, trade what's in front of you, make money from that. And here's gold and silver. And I've got to just note that I did add again to my gold and silver in different forms. So I did buy some physical, and I did buy some products that were tie me directly to physical gold and silver if I want it. But I just decided that with everything shaping up the way that it is, this is one where I'm acting more as an investor, not so much as a trader with the charts. I'm using the charts to show me levels that I think it should fall to. And then when it does, I'm dollar cost averaging on gold, silver, and I plan to get some platinum as well. But I'm really more dollar cost averaging than timing it. And once it got really early in the week, I just decided to pull the trigger, and I was lucky that I did at this juncture because the complex moved up. You can see it's right at the 50 there in gold. That's the gold line, and I'm at 52 on the RSI. So could it break out and try to go? Sure, of course it could, but this is a lower low here, still have lower highs. What would be ideal would be to come up here, break out, probably take out this high a little bit, then drop back down below the 50 and shake out everybody who is more of a trader that bought the breakout. They'd be trapped. But then if they do that, shake them out, but they put in a higher low, and then they only have to move a little bit from that higher low back towards the 50 to break out. That would probably be an ideal scenario. So I might have to add more if that starts happening, because I don't think when I look at the cyclicality of this thing, it still favors the long-term downtrend in my mind. But I am seeing some signs where I might not get my wish as much as I hope, that it trades even lower so I can buy even more from lower levels in these things. So let's look at we noted the oil situation. This has been weaker than XLE. It's remained weaker overall, but you could see that, and I don't know why it just switched me over to I didn't notice that if it switched me over to price as a percentage. But here you go. Got outside of your Bollinger Band down here in green a couple days in a row. They finally brought it back in. We could drop a little resistance line across here, and it's working its way right towards that. And of course, it's got 10 in white, the red in 15, and the blue is 20, my 20, and that's all waiting for it. There's a flat line waiting for it. It still has its work cut out for it. It seems, and this is very interesting because if we look at this a little bit bigger picture here, this is starting to look a little concerning, and I'm wondering that, yeah, you're still holding your support line in the bigger picture, but you're getting pretty close to where, maybe we really are seeing a trend change. And I'm wondering if this became too crowded of a trade. I've been thinking that for a while. So I've been a little more concerned about energy and oil than I expected to be. And that's the way it goes. The market can sometimes do things like that and just kind of catch you off guard. But again, I feel fortunate that it's not like we got smoked in there. I think we actually did pretty well with a couple of bearish ideas that were short-term oriented. LB, lumber, trying to look at lumber for us if it lets me. Looks like Thinkorswim's struggling with that one. It doesn't like these symbols I'm trying to put in here. /LB. Why is it not letting me? Maybe I have to pick maybe it wants me to pick the front month. Well, I guess it does. And I'm back to percentages again. Geez, Thinkorswim's really after me now. Better get close to wrapping this up. But there's XHB started doing a little bit better. I'm not so sure what's going on, because this did support here now near this 480-ish level, and it has bounced a little bit. I obviously don't follow the lumber market very closely day by day at all, because I have no time to do anything remotely like that. But we got to give it its due in terms of, hey, it's been holding above the lows, and it doesn't, again, for a lot of people, that doesn't make sense. It should continue to go lower, and maybe it will. But getting above the 20, I really wouldn't. Gets above that 20, I wouldn't expect, wouldn't rule out an attempt once again, try to move to the 50, which it's done many times. You can see over the course of most of this recent part of the year. So that is trying to put a bounce together. Still right now with the lower highs versus the recent high there, and these highs back here. But that's what I would watch for, move above the 20, or it cracking below, call it 485. Then it would have very little support at that point. So, but that's sort of not rolling over. Maybe that's giving some folks that trade housing, maybe that's giving them some encouragement there. So there's oil. And then I'm trying to look at what it would do. I'm trying to remember the Thinkorswim for copper. Let's see if we can just get a view at copper now. It won't let me do that. Oh, well, I'm trying to recall what it is. Look up copper. Be a pal here for us. No, it's just going to give me, yeah, I'm going to probably have to bypass that one. But I wanted just to give a quick look on that. But yeah, I mean, I think if you look at all these sectors that we covered, it kind of became risk on. I think maybe that's the best way for us to end this, is that they came after mostly every sector, and so with that McClellan oscillator that I covered in the macro measure, and the fact that maybe, there's a higher low put in. Just remember these lows, if you look across the board, these lows are higher than prior lows. And so I don't want to, in most cases, and I don't want to give that short shrift. I still don't believe anything, but that doesn't mean anything, right now I'm thinking, okay, well, this is the makings maybe of something. Don't want to get caught off guard by it. would rather say, okay, well, that didn't matter in the long run, and watch everything hit resistance and roll over yet again. And I would still probably favor that for sure. But I've got to give them their due in the fact that they've got a lot of things turning back up again, and we shouldn't be be disrespectful of that, because it happened across the board. It happened on decent volume. It happened in almost every sector. And the big stocks that I covered, like Apple and so on and so forth, in the macro measure, those all seem that the potential exists for them to move higher, and they're not really flashing RSI ratings. And they're big heavyweights, including Tesla, that take their cues. People take market cues from these stocks and as a package, and they're very heavy weights in the indices. So, right, if those join the party in a bigger way, that would give this rally more legs. So, a lot of, in a nutshell, things are overbought short term. We're near, in many cases, we're near some resistance line or some SMA that would serve as resistance, or flat line that would serve as resistance. So maybe there's a little bit of a early weakness, and then we see what happens. If it reverses completely, okay, that's fine. But I really do think there's enough left in the tank. If these guys want to continue to push things, they ought to be able to do it. So we'll see if this is the start of something bigger this week, or it was just a little flash in the pan for bulls and just yet another short-lived relief rally attempt that fizzled fast. So on that note, I'm going to thank you all for tuning in. I hope you got one little good nugget out of this at least. And I'll see you all in the updates and in the webinars and so on and so forth this week at Market Rebellion. Thanks for tuning in.